Good afternoon, everyone. I'm William Asari Renchi. I'm the training coordinator at the Temple Small Business Development Center. The Temple SBDC helps small businesses start and grow. We do this through our no-cost consulting, webinars, and training programs. We are proud to be part of this nationally accredited network of SBDCs with over 1,000 centers across the US. You have joined us today on this webinar on the topic, the Year-End Power Hour, 5 Keys to Year-End Finances for New Year Success. A follow-up email will be sent to our attendees within the next 2 business days with today's materials. All attendees have been muted. However, we encourage you to post any questions you may have in the Q&A and chats, which will be answered during or after the presentation. Now, I will turn over the floor to Greg.
Well, hello, everybody. It's so nice to be with you here this afternoon, and I'm just going to take a minute to bring up the slides I'm going to present for you. So I'll start. I use the chat a lot, and so I look forward to having you respond to me in the chat. But take a minute right now and just tell me in the chat if you can hear me, and tell me in the chat if you can see my slides. Just let me know. All right, anybody here who can hear me, just say, hi, I can hear you. Anybody who can see my slides, just say, hey, I can see your slides. Okay. So this is the year-end power hour, 5 keys to year-end finances for New Year's success. The real goal of this hour is going to be to help take some of the stress out of the end of the year and think about practical ways to clean up your finances at the end of the year here and start 2026 on a strong note. Okay. That's our goal in this session today. And I encourage you, as I'm going along, don't use the Q&A, but use the chat. So just send me a chat message, and I'll be keeping an eye on the chat as I go. I'll try to answer questions as I go, or at least acknowledge them and say I'm going to hold them until the end. William gave a brief intro of the SBDC. I'm going to give you just a little more detail before I really dive into things here, okay? So Temple SBDC, little things that you should know about us. We're trusted in your community, okay? We've been serving small businesses in Philadelphia and the surrounding counties since 1983, over 40 years. And our job, as he said, is to help small businesses start and grow. So we provide support to entrepreneurs and small business owners, give them knowledge and skills to make smart decisions. And then our business is entirely our clients. So we're funded by the Small Business Administration at the federal government level, the Department of Community and Economic Development at the state level, and Temple University, the Fox School of Business at the university level. And that means that we're part of this nationwide network that does these types of things, like helps a new business start about every half hour, creates a new job, or helps a new business start a new job every 5 or 6 minutes. The other one I always love to point to is we help generate $100,000 in financing every 8 minutes. That's across the nation, okay? I want to be clear. Everyone in the workshop today is not going to leave with $100,000 in financing. And just again, here are those logos of our partners. Again, the SBA, DCED at Pennsylvania state level, Temple University. And we're part of this nationwide network, America's SBDC, America's Small Business Development Centers. This is the Pennsylvania network. So as you can see, we are one of 16 different centers around the state that provides support to small business owners. And just as you signed up to attend my online Zoom training today, you can sign up to attend online Zoom trainings at any of these 16 centers. So I encourage you, if you have an eCenter account with the SBDC, you can go and look at events, look beyond just Temple University, look across the whole state. Obviously, you have the option of going to an in-person event in Erie. I just don't know many of you who want to drive 7.5, 8 hours to do that. But if they have something going on Zoom, go for it, okay? And then to summarize the services that we offer again, the main service, what we're best known for, is our small business consulting, which is at no cost. So any small business owner who comes and works with us to meet with a consultant like me or one of my other 6 colleagues is $0 to you as a client. You sign up, you tell us about your business. We have a short initial meeting, which is usually on the phone, but can also be in person or over Zoom. And we figure out what the most pressing matter is for you, the most important thing for you to address, and then we focus on that and assign a consultant to you. And there are a whole list of things we work with people on there, but specific to today, we work a lot on like accounting, on financial management, really, on financing and loans, business plans, all these things, okay? And then in addition, we offer our resources and training. So our training programs, our training webinars, like the one you're at today, and our clinics. And this is a list of some of the virtual trainings we had. Now, these are all this year, right? Or this week, I mean. And I'm the last one. But these were all the things we had going on. That QR code, if you want to scan it, will take you to our upcoming webinars. I don't know how much of our January programming is posted right now, but we do have programming almost every week, if not every week. And we have a variety of different topics we present on throughout the year. All right, and here's just a quick plug for our website. So it's pasbdc.org/temple. So you can come check our website out there, sign up to receive our services, okay? Remember, we're doing 3 things with businesses. We're helping them start, we're helping them grow, and we're hopefully helping them prosper. So here's me. I tried to kind of match my photo. I've got the glasses. I've got a similar sweater. It's definitely me. But very briefly, this bio is a little long. I think the most important thing for anybody on this call to know about me is that I've owned a small business in the city of Philadelphia for over 20 years. And I ran that day to day for about 15. Other people have run it for me for the last 5 years. I'm still involved on a low level where I check in, coach, do the taxes. But I do not run my business day to day. I'm here at the SBDC helping people run theirs. And so my big thing for you is, like, I've been where you are at some point in the past, and I'm just here to help share knowledge that I've learned, often by mistake, by making mistakes. I want you to avoid making those mistakes, okay? Let's go through our agenda for today. We've already done intros, and that's great. So we're off to the races. We're going to clean up your books. That's step 1 in my 5 tips, my 5 keys. We're going to help prepare for taxes. We're going to talk about improving money systems. We're going to discuss being smart about year-end spending. And then we're going to hopefully help you think about setting some routines for 2026 that'll make all of those other tasks even easier come this time 12 months from now, okay? Why does any of this matter? Well, you want to avoid panicking about your taxes in April when they're due. You want to make better business decisions, and having good accounting and financial information is important for making good business decisions. You want to reduce waste, and going through and looking at your finances can help you identify and eliminate it. You want to start 2026 organized. And if you do all of these things, hopefully, that means you're going to be able to improve your owner pay. You're going to be able to increase what you pay yourself because your business is going to operate better, okay? So step 1 in my 5 keys here for year-end financial success. Key 1, clean up your books. Let's talk about what that looks like. 5 big things to do here. Reconcile your accounts, fix your categorization of your expenses and revenues, review unpaid invoices and bills, review your payroll reports if you have employees, and back up your data. Okay, so we're going to touch on a bunch of things here. If you only have time to do some of these this month, prioritize the top of the list. Reconcile, clear up uncategorized transaction. That's where most of the errors that you're going to make are going to exist, and you want to catch them before the year ends. You certainly want to catch them before tax season. So when we talk about reconciling accounts, what are we talking about? Reconciling is just comparing what's in your accounting system to what's in your bank and credit card statements, your financial statements that you come from your service providers, okay? So you're going to confirm that all the transactions on your bank statements have matching transactions in your accounting system. And most accounting software has this built in. So like if you use QuickBooks or QuickBooks Online, there is a function there. You go into the top search bar or you go through the file menus for reconcile. And when you go and open it, it'll ask you which account are you reconciling, and it'll ask you what's the date of the bank or credit card statement that you have, the closing date, and what was the balance on that date. And then the system will automatically pull up any transactions in the system between the last date you reconciled and the date of that statement. And it'll ask you to go through and essentially match them. So, when I used to do this kind of with a printed out statement, I would have my bank statement, I would have the list of all the transactions that were trying to be reconciled, and you literally just tick off the transaction online when you tick off the transaction on the statement. You're matching them up. Now, what you may discover as you go through and do that is you may have entered something twice. You may have forgotten to enter something. You may have entered something with the wrong dollar amount. Okay. And that's the point of reconciliation. It's to catch those errors and correct them so that everything matches up. If you don't have QuickBooks or Wave or an accounting system, say you keep your books on a spreadsheet, you can reconcile on a spreadsheet too. Just create a column on the spreadsheet that's called reconciled ? And go through, and as you match transactions up, put whatever kind of a mark you want in that column that says reconciled ? To indicate that you have reconciled. So you could be putting an X, it could be putting an R, it could be putting a check, it could be writing the word yes, however you would keep track. But just go through and match everything up. And again, you might discover something's in there twice, or you might discover something's missing, or you might discover something is in with the wrong dollar amount. So those are the things you want to make sure of. You want to make sure the dollar amounts match. Okay. After you've reconciled, you need to categorize your transactions. So in an accounting system, again, you tend to create something called a chart of accounts. And this kind of lays out all the categories of expenses that your business has, all the categories of revenues that your business has, as well as different accounts and loans and things that you have set up. And as you go through and look at all your revenues and all your expenses, you want to assign them to a category, right? Everything should be assigned to a category. And ideally, these categories should be something that your accountant helped you create, and they line up with the kinds of categories that you would report on your taxes that would give you deductions on the expense side, right? So on the revenue side, it might be that you have different lines of business. Like if you let's say, sell household goods, and you also sell consultations about what kind of goods to put in your house, you might have separate line items for those. You might have a category for selling physical products, and you might have a category for selling consulting services. Okay. On the expense side, you're going to have categories broken down by the kind of big expense categories. So almost everybody has rent, for example. Almost everybody has utilities. If you don't have a physical store and so you don't have those things, if you're a home-based business, then you're probably going to have subscriptions, like all your software subscriptions or professional organizations you're a member of. You might have insurance costs. You might have costs for independent contractors, or if you're buying health insurance for yourself, health insurance costs, employee benefits. If you have staff, you're going to have payroll. Okay. And so it's important as you get to the end of the year to go through and make sure that every transaction that's in your accounting system, whatever form it takes, has a category assigned to it. And this will make life easier for you and also for your accountant. You'll be able to go back and look by category to see how much you've spent in each category or how much you've earned in each category, and try to identify trends or spot problems if something's really low or something's really high, right? But this helps you make sure that you don't miss deductions or have to refile your taxes to get your expenses right, or potentially even end up with tax fines because you've done something incorrectly. Okay, and your accountant will love you for having everything categorized. One last thing I'll say: sometimes throughout the year, as you're going along, you will label something like uncategorized, or I used to have a category in my chart of accounts called Ask My Accountant. I would reach out to my accountant in December and send them a report out of my accounting system that said, hey, here are these like 20, 30 transactions from the year that I didn't know where to categorize. Can you help me? Can we get on a call, or can you just reply to this email after looking at them? Because if you have a category like that that's called uncategorized or Ask My Accountant, by the time you are handing your taxes off, your accounting off to your accountant for taxes, you want to have $0. Excuse me, $0 of expenses that are listed as Ask My Accountant. The IRS does not like miscellaneous as a category for expenses. All right, moving on. You want to review your unpaid invoices and bills, right? Review your unpaid invoices and bills. In this case, on your invoices, you're looking to see, is there money that you're owed that's past due? So if you have an invoice that's been outstanding and somebody hasn't paid it, it's the end of the year. It's time to follow up with them. Like, get that money inside of this year, right? And you can be a little bit relentless, or you can pester people a bit at this point if you need to. Send them an email, give them a call, do both, follow up, make sure you get an answer, keep calling, because that's your money. But at some point, as invoices get older and older, the chance that someone pays them actually goes down. And then the other one I always mention is there work you completed that you haven't sent an invoice for? So, try to look at your invoices, but also look at your list of customers or your calendar of appointments or whatever. Make sure that you've billed people for everything you've done. I will tell a very brief story about myself. Years and years and years ago, my business, which did some corporate training, landed a contract with Wawa, and we were really excited about that. We went to Wawa World headquarters out in the suburbs. We did a training with a bunch of their staff, and we were really excited about the fact that maybe we'd get to do more. We were so excited that I completely forgot to send the invoice. We did the work in July. I sent an invoice in December. They were upset, understandably. They had not had that on their radar. It showed up. It was a problem for their budget because they'd spent other money, and we never worked with Wawa again. We did at least get paid for that invoice, though. So if there's somebody who you did work for and you forgot to invoice them, I encourage you to send them an invoice and tell them it's late. You want to have a conversation with them about it. But make sure you try to get paid for that. On the bills side, once you're done looking at your invoices, look at your bills. So ask one, are you current with all your vendors? If you aren't, pay your bills. Finish paying your expenses inside this year so that everything is accurately reflected what you spent money on this year, right? And if you don't have the money to pay all your bills, do you need to prioritize? Yes. So think about, if you don't have money to pay all your bills right now, think about who are your most important vendors that you need to make sure you pay. There's a difference between somebody who did something for you one time and you don't expect to have do anything else for you again, and someone who supplies a key thing to you. Make sure your key suppliers are paid, and the people who you probably won't work with again. If you have to prioritize, that's where you prioritize. You slow down paying those people if you have to. Don't leave them in the dark, though. If you're going to be late with something, it's better to let someone know. They're going to be less upset if you have checked in with them. It's great if you can give them a sense of when you will be able to pay. All of us at times in our businesses face cash flow crunches or get behind on bills or have a bad year. Don't hide from your vendors, because the last thing you want is to get somebody reaching out threatening to sue you if you don't pay. Okay. Then next on our list is something that applies only if you have employees or if you pay a lot of contractors, but review your payroll reports. So it's very important to make sure that all your employees and contractors have accurate payments for the hours, or in case of contractors, projects sometimes that they worked during the year. It's also important that you have accurate contact, mailing, and tax information for employees and contractors. So now is the time to send an email to all your employees asking them to confirm their mailing address for their tax forms that you have to send out in January, or their email address if you're going to send those forms digitally. Same thing with your contractors. It's important to make sure that for your contractors, you have tax information on file. Any contractor who you paid more than $599, you have to send them a 1099 form. And you have to have either their social security number if they're an individual, or their employer identification number if they're a company, that you include on that tax form. So if you have invoices, going back to our previous chat a minute ago, invoices waiting to be paid, and you do not have a W-9 form from those contractors, which is the form people provide with their company name, mailing address, and tax identification number, get those before you pay the invoices, okay? And I say here, see detailed checklist. William, who introduced this session, is going to be emailing you after class is over today or tomorrow. He's going to send my slides. He's also going to send a detailed payroll audit checklist. So if you have this, to be able to double check it, right? Finally, in this section, back up your data. So most banking and accounting and payroll data is kept by corporate servers that the provider of your banking or credit card or payroll system have. So most of the data is in the cloud somewhere, right? But you don't know what could happen to that company. They could go out of business. They could have a data hack. Something could go wrong with the site. Data could be lost. So I always encourage people, most of these types of systems, whether they're banking, payroll, accounting, they allow you to export the data from the system. Sometimes it's as an Excel file, or sometimes it's as what's called a comma separated values file, a CSV. If you have the option to download your data out of the system, whether it's picking 2 dates and downloading like a whole year worth of data, or downloading it month by month, a digital version of your statements, download these files onto your computer. Keep them on your computer, and then also save them somewhere in your own cloud storage, whether that's iCloud or Dropbox or Google Drive or Microsoft OneDrive. Wherever you keep your important business documents backed up in the cloud, in addition to on a computer or external hard drive, keep those files there. You also have the option, if you want, of printing them off and filing paper copies away in a filing cabinet. Not everybody does that. I understand why not everybody does that in this day and age, but the idea here is you want to have records for at least the last 7 years for tax purposes. Okay, that's clean up your books. I know that I've been talking quite a bit, and that was the longest section of my presentation, that first section, but I want to pause here for a second and ask, in the chat, can anybody tell me if you have any questions? Any questions for me in the chat right now? I'm here. I'm ready to answer them if you have them. All right. Well, again, feel free to chime in as I'm going at any point if you have questions, okay? So let's go on to our next step. Eliminate tax time chaos, right? Prepare for taxes. Tax season pain comes from January disorganization, not the deadlines in April. Let's just start there, all right? I'm going to talk through a slide now. This is the only slide I'm going to show for this one, of the kinds of documents and files you should get ready now and in January for your accountant to make them love you. All right. So a lot of times businesses miss deductions just because they don't have good documentation and they're not organized at the end of the year. So think of this as like whether it's a virtual folder or an actual manila folder envelope. This is everything you're going to want to give to your accountant as they start to prepare your taxes. You're going to want to have reconciled bank and credit card statements. So what do I mean? I mean, you've done the reconciling in your accounting system already. You're not asking the accountant to do it. And you just need the statement generally that covers December 31st. So if you have statements that run month by month, great. Your December statement that goes up to December 31st. If you have statements that run across months, because like credit cards often run across months, then whatever statement you have that has a closing date on December 31st or later. So it could be even like into the middle of January, right? But reconcile through the end of the year, provide the last statement that covers December 31st to your accountant so they can double check the reconciliation, confirm it. You're going to want to provide a profit and loss statement and a balance sheet. Now, if you have accounting software like Intuit, it's already going to automatically generate those things. Make them for the year, January 1, 2025 to December 31st, 2025. If you have staff, payroll reports, okay, payroll reports, you'll generate these in January. You're going to generate W-2s that are sent to all your employees individually. That process also generates something called a W-3, which is a summary of all the W-2s taken together. Throughout the year, as you were paying your employer's share of taxes, Some other forms would have been generated once a quarter and sent to the government. They're called 941s. You should have 4 of those. And there's a form that comes at the end of the year which covers your federal unemployment taxes. That's called a 940. All those forms together, gather them covering the year 2025, put them in that folder, whether it's digital or physical, to give to your accountant. All those contractors you paid, make a summary list of them, or simply provide copies of all the W-9s. If you have any loans, you're going to need the statements from those loans from throughout the year so that your accountant can separate out how much interest you were paying, because interest is deductible. If you have big assets, things that cost a lot of money that you didn't count as an expense in a single year, but you're counting them as a gradual expense as they lose value over several years. This could be things like if you have a t-shirt printing business, a t-shirt printer, or a screen printing machine. If you're a general contractor and you bought a truck for the business, not with your own personal money, but with the business's money, the depreciation on the truck. If you have like fancy, expensive computers that were so expensive that they count as being depreciated as opposed to just an expense, that might be here, right? But make a list of those things, have records showing when you bought them and what you paid for them. And your accountant will use that information to depreciate those assets, which will deduct from what you owe in taxes. If you sell a product with sales tax, you're going to need your sales tax filings, copies of your sales tax filings. And it's also useful so often to just include any licenses and permits or major contracts you have. Provide those to your accountant so they can confirm if there's anything where they need like a license that has to be renewed, or there was a fee for the license that can be deducted. Also just to prove that you're in business. And this last one, if you do driving with a car that is not owned by the company and you reimburse for mileage, there are a couple ways to do that, right? There are different methods, but make sure that you have either your mileage log or your vehicle use documentation or your vehicle use documentation. So you can give that to your accountant and they can make sure that the correct deductions for the company use of a personal car are on there. Okay. So that's preparing for your accountant. Look at that. Third in my list, improved money systems. What do I mean when I say improved money systems? Let's talk about it. I'm going to give a recommendation here. I'm going to recommend that you get set up so that in the new year, you have 2 or 3 accounts. A lot of businesses run with just one account. And can you do that? Yeah, absolutely you can. But here's what I recommend. You're going to keep the account you already have, and you're going to call that your operating account. This is where you're going to pay vendors, pay subscriptions, pay for supplies, write your rent checks from, have all the money the business makes come into that account. But then I encourage you to set up a second account that is just where you save money for taxes. Just where you save money for taxes. So in this case, when you're going along and making money throughout the year, you and your accountant have a conversation about approximately how much of your money you should save to make tax payments. Now, if you've been in business for a couple of years, you're going to be helped by the fact that you've probably been making estimated tax payments to the federal government, the state government, and maybe even the city. They have a sense of how much you're going to owe if business stays the same. Remember, if business goes up a lot, what you owe is going to go up. But those estimated tax payments, make an account for those and move money over into it regularly, right? Whether it's at the end of every week, every other week, every month. Make movements of money that you earned, set aside whatever percentage you and your accountant have decided, or you know from your estimated tax payment requirements you'll need, so that it doesn't sneak up on you. When you pay payroll and there are employer share taxes, put that in the tax savings account, right? And then pay it out of that account. And then owner pay. This is to compensate yourself in a predictable way. So let's talk about these in a little more detail. The idea here behind having an operating account This is the account where all the income comes in and all the business expenses go out. The advantages of having a separate account for operating, some of them are right here. Okay. You get a clear view of your cash flow. So you always know what's available for operations. You're not holding money here that's supposed to be for paying yourself or for paying your taxes. So if you've done the changes I'm recommending. So all the money that's in here is available to use to spend on things the business needs. Okay. It prevents commingling. That means that you're keeping your personal money and the owner compensation money separate. And that's good to do because there are tax implications and legal implications if you don't keep your personal finances and the business's finances separate as a limited liability company. This also makes bookkeeping cleaner. So imagine now, because you have an operating account and everything that comes in goes into it and everything that goes out from it. Now, all the business expenses are in that account. You know that everything that's in that account is a business expense. So your bookkeeping, your reconciling, all that stuff becomes much simpler. Now, does this require some discipline on your end? Yeah. I encourage you to get a separate debit card that isn't the same as the debit cards, you have for your personal accounts. And it does mean that you'll do things like be at the store, buying things for your house and realize you need something for the company, and you'll check out twice. You'll check out once and pay with your personal card for your personal stuff, and you'll check out a second time and pay with your company card for the company stuff. But this is going to make your life easier, even though it takes a little bit of time in the moment there. And this also reduces overspending. So if you've put all the money for your taxes in a separate account, you're less likely to borrow money that's meant to pay your taxes, right? Because it's separate. Like you can't get it quite as easily. You'd have to transfer or you'd have to go to the bank to take it out. And all of this taken together means that this improves your financial decision making because you can look at the balance in your operating account and you can trust that it represents your actual operating funds, the money that is available, that isn't spoken for by the federal government or by you as an employer, to invest in growing your business and paying expenses, okay? This becomes the heartbeat of the business. Everything flows from that account. The tax savings account. This is where I said you're going to put all the money, the percentages of your income for federal, state, and local taxes. All right. The biggest advantage here is no more panic at tax time. If you do this, and if you've done it accurately, and you have a good accountant who's helped, all your money is set aside when it comes time to pay estimated taxes every quarter, and all your money is set aside when it comes to pay taxes at the end of the year. Those quarterly tax payments become really smooth because you've been saving gradually for them. Let's just say as an example, if you do your taxes and they tell you that you have an estimated quarterly tax payment of $600, that means every 3 months, you got to pay $600. So what you can do is you can start setting aside $200 every month or $100 every other week, every other pay period, maybe if you pay yourself every other week, or $50 every Friday, $50 every week, right? Whatever it is, you get it on a schedule. A lot of banks even allow you to automate a transfer from one account to another. So you can do that. It eliminates the temptation, right? The money is separated from the operating account, so it's less likely to be spent. I encourage people when they set these accounts up, these separate accounts up at the bank person will often go, well, would you like me to link this to your debit card? Tell them no. That way you can't accidentally be out and spend money or withdraw money from these accounts. It puts you in a position where you would have to physically go into the bank to do that, right? Now, that doesn't mean you can't still provide these account numbers to pay your taxes. You're not going to have to go to the bank to take money out or to get a check to pay your taxes. You'll still have a routing number. You'll still have an account number for these accounts, but make it hard to get at the money any other way. And so this will improve your cash flow because, again, you're only going to operate on money that belongs to the business. Remember, that tax money that you're holding throughout the year, technically that money already belongs to the federal government. You're just holding it what's called in trust until you pay it over. And if you have money you're holding in trust and you don't pay it over, the government gets really angry. They get really aggressive. There is a special penalty on funds that are held in trust by a company called the trust fund penalty. And it is 100% of the amount of money. So imagine you had $100 in trust fund taxes that you had to pay and you didn't pay them. The fine would be $100. So now you would owe $200. Okay. Keep that in mind. So again, the bottom line here is you set up a tax saving account so that taxes stop being an emergency and just become a routine thing. They're almost just like a subscription. And then this owner pay account, this is not for everybody, but if you are working in your business full time and if you are relying on your income from your business for your day-to-day living and your family's day-to-day living, I encourage you to set up an owner pay account. Figure out what you want to be paid and figure out a schedule to automatically withdraw money over from that operating account into your owner pay account so that when paycheck time comes for you or owner's draw time comes for you, whatever schedule that is, maybe it's every other week, maybe it's twice a month, maybe it's monthly, maybe it's only quarterly, but the money is there. The money isn't sitting in your operating account where you might be tempted to spend it and then at the end of the month go, geez, there's nothing left over for me. This gets away from that, right? And it also helps maintain a legal separation between the business and your personal funds. And then it encourages sustainable compensation. So if you're taking your salary out and putting in this separate account, let's say weekly, right? Say weekly you're taking money out of your operating account, putting it over here, and then once a month you write a check from your owner pay account to a personal account. So it's actually fully yours. Now, if you want to think about whether or not you can give yourself a raise, all you have to do is go back and look at your operating account and say, hey, has that operating account been growing every month? Is there consistently always, 2,000, 5,000 more dollars in that account at the end of each month? Well, then maybe I could consider increasing my owner pay by $1,000 or $3,000. I can tell that now that I'm able to do that because I see that my operating account has extra money in it at the end of each month. Okay. And so this bottom line here is this is how you maintain healthy owner habits and protect the business. Because remember, you need to get paid. You are working in your business. And it's easy to have this fall by the wayside. Again, a very brief story about myself. I didn't do this for years. And then I ran into a period of time where there was a series of kind of small to medium-sized disasters in my business. I didn't get a paycheck for almost 6 months because at the end of every month, I kept looking around and going, oh, I guess there's nothing for me this month. And then I had to turn around and get serious about making sure that I was setting money aside for myself. Don't be like me. Make your owner pay account now. Also think about whether there are some things you can automate. So, improving money habits. There are a lot of transactions that come into your accounting system and you have to categorize them. But there's all this AI now that's being added to accounting systems. Do check the work that the AI does. Do make sure that recurring transactions are accurate. If you have customers who pay you monthly, see if you can automate those invoices so they automatically go out every month, same amount, same customer, same email, whatever. Try to find a way to capture your receipts. Like if there's an email address where you can just forward email receipts and they automatically get added to the accounting system, great. If there's an app you can download onto your phone so that you link that app up to your accounting system, and every time you buy something, you just take a picture of the receipt and it automatically uploads it into the accounting system, maybe even digitizes it, maybe even categorizes the transactions. That's awesome. And if you're using a point of sale or a customer relationship management system, and you can have that sync up with your accounting software, so all your sales automatically transfer in, all your customers automatically transfer in, do that. It's going to save you so much time. The one thing I don't encourage you to automate is auditing your books. Like, don't hand that off to some other employee. You want to continue to look at the expenses coming in and out and make sure that they're all real and make sure that there's no funny business. Okay, so that's improving money systems. We're chugging right along here. Um, let's go on and talk about being smart about year-end spending. So my big point that I want to make here before I even show you some of my slides, and there are just a few, is buying something in December rarely saves money unless you actually need it in December this year. So let's just start there. There are a lot of people out there who say, oh, it's a great time to get a bunch of expensive things and reduce your tax liability. Okay, maybe, but let's talk about that a little bit. So should you buy something now or later? Let's talk about factors to consider about buying now or waiting for the new year to make something, make a purchase of something. So think about first the tax implications. What do you ask here? You ask, will purchasing this in December meaningfully reduce my tax liability this year? Or is it better to save it for next year? So if you've had a really good year and you know that you owe quite a bit in taxes, and if you think that next year isn't going to be as good a year because, there was some once in a lifetime client this year, let's say, who spent a lot of money and isn't coming back, it could make sense to make a big purchase this year that you know you need so that you can reduce your tax liability this year because it's going to be an outlier. It's going to be a lot more this year than most years, and it's going to be a lot more this year than next year. Now, even if it's a advantageous thing, the next question you got to ask yourself is, what is your cash flow like? How much liquidity, how much cash do you have in the business right now? So even though this purchase might save me a lot of money, can I afford it without hurting my business's stability? What does that mean? Okay, maybe I could get a big tax break if I purchase this thing, and this is a special year where I had a lot more income than I really expect to have next. It's a good deal, but if I buy it, I'm going to have no money in the bank, and I've got to pay payroll in the middle of January, and I might not be able to. Then it's probably not a good call. Right? If you're going to empty your bank account to make this tax advantageous good price purchase, that might not be good because you might not have money to pay your bills in the new year. And that's not the way you want to start 2026, behind on bills with your vendors. Third is thinking about operational necessity. What do I mean by that? I mean, is this purchase urgent or can it wait? So it's one thing if you're a bakery and your oven broke and you need to buy an oven because you can't bake bread, right? It's another thing if you're a bakery and you want to get a nice new oven that'll allow you to bake, let's say, twice as much bread. If you're baking twice as much bread, well, that would be great. But if you can safely wait until, February or something to do that, then it might be better to wait until February when your cash flow is a little better to do that. This fourth one is actually one that I find is also really important to weigh and actually is one of the biggest ones, but one of the biggest reasons to weigh something like this. Vendor and market conditions. So the question you ask yourself here is, am I getting a deal now that won't be available in January or beyond? So a lot of businesses have uncertainty around this question at the moment. This year has been crazy with tariffs on goods, right? If you have a big piece of equipment that comes from overseas or is manufactured using parts from overseas, things that are imported into this country, the price of a lot of those things has gone up or is potentially going to go up a lot in the new year. So that might be a reason that right now the price on these items is very good. Another reason is oftentimes companies at the end of the year are trying to make their own sales goals, or salespeople at companies are trying to make their own sales goals. And if they're close, they will often be willing to consider a steeper discount, or they're publicly offering a steeper discount on products, maybe because they're intending to get rid of them or change the product up, or there'll be a new version of the product for the new year. So think about if there's a really steep discount that's advantageous for you that isn't going to be available at the end of the year. If there is, it might make sense to move on a purchase now. Fifth is accounting and bookkeeping simplicity. So remember that when you make big purchases at the end of the year for tax reasons, there is a chance that that's going to raise a flag with the IRS and they're going to want to audit those purchases. Just know that when you're doing a purchase like this, it may be a complicated thing. It may have to go through contracting. You may have to have someone review a legal document. There might be a lot of back and forth with paperwork during a busy time of year for you. And so it's going to be complex or administratively burdensome during this month. Do you want that hassle? Right? And then the last question is strategic planning for next year. How does it fit with that? So does buying this now help you meet year-end goals, or is it really something that to help you meet your goals next year? So like if you've done a budget for 2026 and you put money in the budget for a new truck, right? That money's in the budget next year for a new truck. Do you want to buy that truck this year and maybe be off your budget and then be under budget next year? Do you want to just wait? Just wait until it lines up with the goals you have for next year. Here are a couple of examples done vaguely. Okay, some year-end decision examples. So the first is an urgent operational need and a tax benefit. I'm that bakery I mentioned earlier. Our oven is broken. There's a special tax deduction on buying ovens made in America this year, and I found one. Okay, buy that now. What about a non-essential purchase and you have limited cash? Hey, I've really wanted a new truck for my contracting business. There's some trucks that I like on this lot that I drive past, but I really don't have any money. I'd be emptying my bank account to make the down payment. Probably defer that purchase, right? What about a tax deduction that's small relative to the cash flow risk? Well, I could buy this. It would save me a little bit of money on taxes. Might make it hard to make payroll at the end of January if I don't have good sales. I would probably wait on that. Consider waiting. All right. A significant vendor discount or a risk of a future price increase, that's something to buy now. I run a restaurant, and this restaurant supply company is having a clearance sale on refrigerators. And my refrigerators are past their usable life. They haven't broken yet, or maybe one of them isn't really holding temperature. But the same model, because it's getting eliminated, is 70% off. They're trying to get them off the floor, right? And I've heard that refrigerators might be subject to tariffs next year, so they might be a lot more. Great, buy that refrigerator. Go for it. Okay, just some examples. Doesn't cover everything. Another thing you want to do at the end of the year is you want to look at subscriptions and vendors. So, set some time aside in your calendar between now and the end of the year to go and look at anything you pay for on a subscription basis. Go find your old like credit card statement or bank statement from January. Look at what you paid for that service in January and look at what you're paying for it in December. How much has it gone up? If it's gone up a bunch, is it still valuable to you at that new price? If you go and look at your year, how much have you used it? You know? And if the answer is that it's not valuable to you anymore at that price, or you haven't used it much, can you go on their website and chat with somebody? Can you call? Can you email and have the price reduced? Yeah, I'll give you an example here of companies are often willing to reduce the price for you to keep you as a customer. I called to cancel my subscription to the Philadelphia Inquirer. They required me to call. And I got on the phone and I said I wanted to cancel. And they put me over to somebody else immediately who said, well, what about half price? And I said, I really just don't read it enough. I can't do it. I've got other subscriptions. And then after about 5 minutes, they said, well, what if we asked you to just pay us $1 to stay a customer for 3 more months? And I went, okay, fine. And then I put a reminder on my calendar 90 days out to call again and cancel my subscription. But, have those conversations. Also, away from subscriptions, if you just have key vendors, key suppliers, right? And they have things that they're providing to you that are important to your business, go pull a bill from January, pull a bill from December, look at how much their rate has gone up. Also look at how much your order size has gone up. So if you're using a lot more of their service or if you're ordering from them a lot more, you should be getting a discount. You shouldn't see your rate going up. So if that's the case, that you're ordering more or the rates have gone up, get in contact with them. Ask if they can improve on their pricing for you because your volume has increased. Remember, if you don't ask, you don't get. And if you don't use, stop paying. All right, into our last section. We've got 10 minutes left, and with a little luck, I'll be able to set 5 minutes aside for some questions. So we're going to talk about building sustainable routines here. I'm going to give you some examples of a weekly, a monthly, or a quarterly routine you could get into. And I'm going to encourage you, as you hear about these, think about which one you'd like to try in the new year. If you don't do any of these yet, that's okay. Try to start doing one. If you do all of these this year, that's great. Give yourself a pat on the back at the end of the call. All right, so this is a weekly thing. This is called the 10-minute money check-in. I like this because it's designed to be relatively short. For a small business, this really will be 10 minutes. For a slightly larger small business, it might be 15 or 20. It could even be up to a half hour. It really just depends on how many transactions, how much financial activity is happening in the business every week. But here's the 10-minute money check-in. Minute 1, log into your bank account and check your balance. Okay? Whether it's on your phone, at your desktop computer, on a tablet, whatever. Open up your bank account. What is the balance in it? Look at what's happened in it in the last week. You're looking for 2 things here. Are there any unexpected withdrawals or charges? Anything that might be fraud or an employee not doing what they're supposed to if you have employees with access to the account? Look for unexpected charges. Then second, just look at the balance and quickly check how much you have to pay for different things next week, the bills you have at the moment. Is there enough money in the account to cover the bills you have to pay in the next week before you do this again? Then, minutes 1 through 3, review your income and payments. So, who paid you this week? What invoices do you still have that are outstanding? Okay. And then, do you need to send reminders to those invoices? So, if you have an invoice you sent like Monday and it's Friday and you gave them 30 days to pay, probably don't send a reminder. You'll probably seem annoying there. But if you have someone who had an invoice that was due to you Wednesday and it's Friday and they haven't paid it, send them a reminder. Just take a minute to do it. Sometimes one reminder is all you need to get people to pay. Life gets busy, they forgot. After you're done looking at your invoices and your payments, now go in your accounting system and categorize transactions. So make sure you've got receipts attached to your expenses. Tag items if you do that. So if you use tags or classes in your accounting system so you can relate expenses to particular projects or particular jobs or particular clients, go ahead and make sure you're doing that. Just clean up, right? You don't want to have a bunch of uncategorized transactions. Doing this each week is probably 3 minutes if you're a kind of small business. Doing this at the end of the year for 52 weeks can be hours on hours on hours. Also because as you get further and further away from the expense, it gets harder and harder to remember what it was or who it was for, what project it was related to. Minutes 6 through 8, move money where it belongs. Remember those accounts I talked about 10, 15 minutes ago? Move your taxes into that tax savings account. Move your portion of your weekly paycheck into that owner pay account. All right? Move money around to where it's supposed to be. And then in the last minute or two, after you've done all those things, look for red flags or action items. So are there any renewals that spiked in price? Like you went, oh my gosh, my Netflix account was like 50% more this month. Okay, make a note of that. That's something for you to focus on figuring out this week. Are there vendors who are waiting on payments? That's a red flag. You're behind on paying vendors. Figure out if you can take care of that or get an email out to them that says, hey, I'm sorry, I'm behind on this. Give them an estimate of when you think you can pay it. Be realistic. Look and see, are there tax deadlines this week? Right? Make sure you're aware of what's coming up. That's the 10-minute money check-in. Here's a monthly option for those of you who like a monthly thing. This is the monthly financial review. So every month you're going to pull your profit or loss or your income statement from your accounting system. And you're going to look at all your lines and you're going to look for unexpected variances or trends. So is your gross margin, that means the money you have after your income and after you've paid for the cost of your goods sold, is that where you want it to be? Is it the right percentage? Is your net profit, are you showing a net profit at the bottom of your profit and loss? Right? You want to make sure you are. Look at your cash flow statement. Log in, pull a cash flow statement, and identify, like, do you have big upcoming cash obligations, big bills coming up? When you look at your cash flow statement, does it estimate that you have enough cash to pay everything for the next 30 or 60 days or even longer? Right? Look at how far out into the future your cash flow is positive. And then look at your accounts receivables and accounts payable. So like just print for the month. Here were all the accounts receivable I had. Here's what's outstanding. Here were all the accounts payable I sent out. Here's what's outstanding, right? Check for unpaid invoices, follow up on overdue payments, check incoming bill due dates, make sure you're getting those onto a calendar or into the accounting system so that you'll avoid paying late and paying late fees. Do your bank account reconciliation. Right? So if you're doing a monthly financial review, pull all the bookkeeping records together, pull your latest bank and credit card statements and reconcile them. And then when you discover discrepancies or things that don't match, fix them. And then the last thing is if you have key metrics or if you have a budget you made, compare where you actually are, your actual results, against what you projected in the budget. And if there are areas where like your revenues are behind, flag that as an area that needs some concern. You need action there. If you have expenses that are over budget, same thing. Like make a note to make sure that you figure out why and figure out if you can do anything about it. And then this last one, your quarterly forecasting and savings. So this is really if you have a budget, how has your business performed in the last 3 months against your budget? Are the revenue projections that you're exceeding? And if you're exceeding, figure out why. Understand why. It's not enough to just go, wow, revenue's way up. Why is revenue way up? Look at that, right? Figure out if that is a trend that is likely to continue. If it is, maybe you want to adjust your forecast for the next quarter. If you look at it and go, oh, I had this one-time thing, there was a client that showed up out of nowhere and spent a bunch of money and it was nice, but like it's not going to happen again probably, then you don't want to adjust. But you'll only know that if you figure out why. Same thing on expenses. Are there expenses where I was over budget? If the answer is yes, don't just go yes and then go on with your day. Figure out why. If you're over budget on something, you need to know why, right? So like a classic example of this, especially first-time budgeting, is people go into January, they've budgeted their utilities for the year, they looked at what utilities cost them across the year, and they put them in 12%, 1/12 of the amount they spent all year every month. And then January, February, March come around and they go, oh my God, I'm like 50% over budget on utilities every month because it's winter and because they're paying for heat, right? And that's usually the most expensive time for utilities for a store. So just make sure you understand why and then, understand what you need to do. Like if it's something that isn't explainable by seasonality, you may need to take some action, either to control the expense, or you might have to decide I got to increase prices on my product or my service. Okay. And then last, just look at what are your expected tax liabilities. Are the funds set aside or have you already paid? Great. So I encourage you to really think about picking one of these habits, thinking about how you're going to track your progress on getting into that habit. And then also think about how you'll reward yourself if you successfully build a new habit around finances in the new year. Okay. Well, we have 1 minute left, and I would ask you before you sign off, please, here's the link on this slide, but I'm also putting the link in the chat. I do this in a vacuum largely. I talk at you for an hour. I respond to questions you have in the chat, but I don't know how I've done unless you fill out this form, which is anonymous. And I appreciate your comments, both negative and positive. I often call the negative comments constructive. So be negative, be constructive for me. Tell me what could be better or what else you'd like to see in here. If there are things you thought were really helpful, tell me what you really connected with. And it only takes you about 2 minutes. So it's 1 o'clock. I have time for one or two questions if anybody would like to ask them in the chat. Okay. Any questions from anybody? Okay. Brianna asks, I joined a little late. Should the owner pay account be a personal bank account? If not, please share why not. So there are two ways of looking at this. You could have it be a personal account and you just put money into the owner pay account and then you are, using that money for your personal expenses. Certainly, any of your personal expenses should be coming out of account other than the business account. Another way some people do it is they move money over to the owner pay account and then when they actually write a paycheck, they move it from the owner pay account to a personal account then. Either one works. Other questions? You're welcome. I have time for one more. Okay. Well, I appreciate every one of you for being here today. I appreciate those of you, hopefully every single one of you, who've taken a minute to do me the favor, repay me with your thanks and your feedback on that feedback form. If you celebrate the holidays, I hope you have a very happy holiday. I'm wishing you all a very prosperous new year. And know that the SBDC is here. So if you aren't already working one-on-one with a consultant, I encourage you go and fill out that consulting intake form, request consulting services on our homepage. And I'm going to put that survey link in the chat again. I'll give you just 30 seconds to click that link. I just posted it again, but I would love your feedback. And as I said, thanks, everybody. Thanks very much. Just 1 second. There it is. Now you should all see it, and I apologize for not having it before. So I'll hold here just for like 30 seconds before I sign off so that folks can click that link. Yeah, appreciated all you being here today. Hope you found at least some nugget you could take away, if not a lot of useful information. And we're here if you need us again for anything. Please do reach out, or we'll see you online at another session like this one. All right? Happy holidays, everybody. Happy New Year. Talk to you again soon.